Like, what on earth do you think Roger Federer would have said to Michaela Schifrin, where she's just like, "That's it. I'm going to start skiing better now."
I
Uh,
have no idea.
Yeah,
maybe he's a
No,
nihilist and he says nothing matters anyway, so just go out and have fun. And then that was the trick.
it could have been. Yeah, because I've seen stories like this before, where it's like, he really said something to me, he really changed the way I think about this. But like, I honestly, maybe it's just because I was never a good athlete and nobody wanted to put the time into to mentoring me. But I just can't imagine like what on earth they would be talking about. That would be like, oh, you know what? I am doing a terrible job of skiing. I'm going to do better now. So
Maybe he threatened her. Who knows?
could it be? Yeah. All right, welcome to episode 69 of Farm to Markets. Today we're talking about if tech stocks are back, if the recession will happen sooner rather than later, and we have more lightning round questions at the end. Technology stocks are off to a strong start after enduring a miserable 2022. Earlier returns so far this year are encouraging. Alphabet stock has gained about 11%, while Amazon and Meta have gained about 15% and 19% respectively. And Amazon has risen about almost 10%, and microstocks only up about 1%. Still, the stocks are well below their record highs despite the recent rally. Do you think we will see a comeback in these companies, or is this just kind of like a beginning of the year fluke? What do you think, Alex?
Well, I think the wishy-washy answer is maybe. It just depends. I think there's two things I'm looking out for when I'm looking at tech stocks this year. Number one is, where is the Federal Reserve going to stop with the rate hikes? They've said throughout 2022 that they want to get to the 5 to 5.25% range for the reserve rate. And I believe they're going to have another meeting here at the end of the month, beginning of February. And if they bring rates to that level, they've said in the past that that's where they think they will stop and leave them. So depending on how tech stocks react to that rate hike, and then if the Fed then says, and we're done for now, I think that will give us a good idea about what we can expect from tech stocks this year. The other thing is, there are a lot of indicators flashing red for possible recession in 2023. We've mentioned in the past we had a recession that wasn't a recession, depending on who you asked last year. It was very, very mild. If we get something more significant than last year, down a couple percent for quarterly GDP growth for two consecutive quarters, I don't know if tech is going to do very well in a situation like that. Um, but we've already seen some layoffs from some of these companies. Google, Amazon's laid off a lot of people. Twitter's been laying off people. So well, I think Twitter's private again. But anyways, they've kind of muddled along recently and then rebounded since we haven't seen too much horrible news for tech lately. So maybe another rate hike is already priced into these tech stock values. But again, I would take a look and see how they react to this, what I think is a very likely coming rate hike. And then when the Fed leaves things alone, I guess we'll see. But I would say if the Fed stops at 5.25 and we don't get a recession, tech should have a decent year.
2020 and 2021 were gifts, particularly to the tech sector. I don't think we should anticipate a comeback. I think the tech sector got, it already got a big enough boost as it was, and coming back from the recent slumps, probably not to be expected. I see investors as being anchored to that fourth quarter of 2021, where stock prices were great, and they're overlooking the fact that fourth quarter 2021 stock prices were probably unrealistic and unsustainable. I like to imagine that the tech stocks are like plants, and they were removed from their natural habitat in the forest, and they were placed in a hydroponics lab where they received everything that they needed for maximum growth. In 2020 and 2021, we had incredibly low interest rates. The government was pumping huge amounts of cash into the economy, and the global stay-at-home orders only increased the demand for tech products. So they had a great run. Well, now interest rates are not low, and the cash infusion has stopped, and the economy is reopened. So now tech stocks are no longer in the hydroponics lab; they're back in nature, and they have to learn how to adapt there. So I don't think we have to. I don't think we can expect a rapid tech sector comeback. I think we need to approach tech stocks based on their current market conditions, growth, revenue, earnings, valuations, and for the most part, that's what investors seem to be doing, which is actually pretty encouraging considering that wasn't the case 23 years ago in the tech sector. So I don't think tech stocks have gotten knocked down and they need to get back up. I see tech stocks as just rebalancing and adapting to their new environment. And by the way, I think that's a good thing.
I have to agree with Drew, is that in 1968, Bob Beeman jumped 29 feet, 2.5 inches in the long jump, which was like a couple of feet better than any other person had ever done in history. That was the world record. Nobody has really come close to 29 feet since then. And I think that during the pandemic, technology stocks, as Drew was alluding, they were just in a perfect situation to do extremely well, where people were locked in their homes, and social media advertising was just making money hand over fist when everybody else was bleeding cash. So we take a look at those evaluations and we say, well, geez, I bought those stocks. People only really care about stocks when they're going down. When they're going up, people just naturally believe that that's the direction they're always supposed to go. I don't think tech stocks are out of the running for making money. I just don't think we're going to see those kinds of gains until we have some sort of a breakthrough technology that gives them a reason and an impetus for investors to go, yeah, we're going to invest in this over here instead of investing in other things like energy.
Yeah, I think they got I think most of the bad news was priced in last year. I think they certainly got some of these companies, Google and some of these other ones who announced layoffs actually saw a increase in their stock price because of that. As harsh as that sounds, when you lay off employees, that saves a company revenue, makes it easier for you to withstand any type of upcoming recession. So when they announce layoffs and they announce a strategy to deal with a potential recession, that obviously makes people more enthusiastic about the stock. So they saw a little bit of boost from that. But I agree with you guys, is that if you liked this stock, at the end of 2019, then you'll probably like it now. But if you're buying the stock because it's down 90% and you think it's on sale, most of these companies, they are down 90%, but kind of like we talked about, I think earlier last year, or probably the middle of last year, is that they're still above their pre-COVID prices. So a lot of these, I checked out like Google, Microsoft, Nvidia, and some of these other ones. They just got crushed over the last year. But if you would have bought it in 2019, you would have been, you basically would have been right back where you were started. So it's not like you're buying them at deep discounts. You just had these 2 years that were just very uncommon. And then they basically just did like a hard mean reversion back to 2019 levels. And then that's where they are. So if you liked it in 2019, you thought it was a steal then, you're back to those prices. You can get into it now. But if you're buying it because it's down 90%, I don't know if that's a good indication that you're getting it on sale. But also I'll point out is that if you're buying like Google, Microsoft, Apple, any of those companies, you're still not buying bad companies. So I wouldn't necessarily poo-poo it, but but if you're buying it because it's down 90%, I'd think twice, I think. All right, let's see here. So moving on to the next one. So despite signs that inflation has started to recede, economists still expect higher interest rates to push the U.S. economy into a recession in the coming year, according to the Wall Street Journal's latest quarterly survey. On average, business and academic economists polled by the journal put the probability of a recession in the next 12 months at 61%. A little change from October's view that there would be a recession, 63%, that they gave it a 63% chance of recession. both figures are historically high outside of actual recession. Do you think the recession will happen this year, or do you think? I know that a lot of economists think that'll happen in 2024. I mean, do you think it's going to happen like in this year or next year? And then, do you think the Fed can pull off a soft landing as they're trying to do?
Well, I guess if I had to pick, it would probably be sometime this year, though it may not be. I don't think next year is an unreasonable expectation. You know, maybe it starts in the fourth quarter and carries into early 2024 before we get the official designation. I think we're going to get one in large part because it's exactly what the Federal Reserve is trying to do through interest rates. They're trying to slow the economy down on purpose so that they can crush demand and get inflation under control. A recession happening out of this is, I mean, that's the quiet part they usually don't want to say out loud, but of course they want to create a recession or at least significantly slow down the economy. So yeah, I think we'll see one. Whether it happens sometime later this year or early 2024, I guess difficult to say. You've got a lot of these big companies, for example, just look at the tech sector already that we just talked about. All these companies are addicted to borrowing money and using it to fund operations and paying practically zero for the privilege of doing so, but all of a sudden everybody has to pay to borrow money again. And this is leading to businesses slowing down hiring and expansion. It's leading to layoffs, all kinds of things. So again, I think the idea that maybe there won't be a recession, I think there's pretty certain chances that we're going to get one. And I do think it'll also, by the way, be worse than the last one we had, which was that very brief, very mild non-recession recession from last year. So, yeah, I think the Federal Reserve is trying to do it, and I think they're going to succeed.
I get a kick out of those analyst figures, 61% recession. It kind of reminds me of that scene in Anchorman where that guy, he's putting on cologne. He's like, 61% of the time, there's a recession every time. It's like, that doesn't really mean much to me. 61%. If we're just looking out our front windows, right now, the labor market's still pretty hot. I think you could say it's decent. Wage growth is good. The balance sheet of the average consumer is still pretty strong, and the claims for unemployment insurance is still pretty low. However, in order to bring down inflation, I think a recession will probably occur. I think Alex mentioned we're seeing a big layoff in employees from big companies, but so far those people are still able to find other jobs, and that's what they're doing. They're just finding employment elsewhere. There's still jobs on the market. Now, I will say that the job market is often a lagging indicator of economic health, so that only supports the argument for a looming recession. But I think the big question is, what will a recession look like if one does occur? I think that, kind of like Alex, I think it's going to be relatively mild unless something else comes up, like a major geopolitical event or a supply issue. I think for the most part, in 2023, the fun's going to be over. I like to think of like it's like consumers are the cartoons, like in Looney Tunes, where they walk over the cliff casually and then they realize that they're floating in midair and then they run back to safety. It's almost like we're at that point where we're floating in midair and we realize, oh, we need we're going to fall. We better do something. 2023, I don't think people can rely on as their savings as much. They can't rely on stimulus. They can't expect a wide open job market. Job competition is probably going to get tighter. I think a soft landing is possible. What would really irk me, though, is if the Fed was able to pull this off and they got credit for saving the economy from a major recession. I know I probably don't give the Fed enough credit than they deserve, but I also think they're a bigger part of the problem than people realize. Now, as far as whether recession is going to happen, is it not going to happen? I think we're looking through the wrong end of the telescope. Let's get real. If a recession does occur, which will happen sometime, I don't know when, it's important just to follow the simple rules of wealth management. Pay off your debts when things are good, so you're not squeezed when things are bad. Have your emergency fund, invest, diversify your investments. Like we say, we build boats, we don't predict floods. A recession is only a crisis if you're not prepared. So instead of talking ad nauseum of when this recession is going to occur, just make sure your own households and investments are in order.
In rhetoric, there's a fallacy known as the precise number fallacy. So when you hear things like 61% of economists say this, I kind of take it with a grain of salt. We've said on the show before that when it comes to track records, economists have accurately predicted 7 of the last 5 recessions. That whenever I hear, unless we actually start seeing economists out in the public square tied up in stockades where they have a sign around their neck that said, "I was wrong about where the economy was going," I don't really put much faith in what economists have to say, because we never hold them accountable when they're wrong. So you keep getting your $80,000 a year paycheck for being a economist pundit, and you can continue to be wrong. The second thing is that people don't just lay around waiting to go into a recession. Is that wise people, if they know a recession is coming, they start preparing for it, just like Drew talked about. The issue is that there's a whole nother cohort of Americans who sit around and, well, if things get really bad, they'll just give us another stimulus check. I mean, that's what they did in the early 2000s, and that's certainly what they did during the pandemic. That really complicates the economy, is that when you have players in the economy, when you have buyers and sellers who believe that there's going to be a bailout if things get bad, that really makes a soft landing complicated, because you don't know how people are going to react. If they prepare like Drew was talking about, we could certainly have a soft landing. But if a sufficient number of buyers and sellers act like, I don't care how bad the economy is get, I'll just wait for my stimulus check, that could have serious repercussions.
So, parts of the economy are I would say are definitely in a recession. And I talked about this with somebody in the office this week, but like real estate, I would say definitely going to see a recession this year if they're not already seeing it, because loan officers, realtors, contractors, all that stuff appears to be slowing down for them in at least in Flathead Valley. I haven't seen any national numbers about that, but just from the people I talk to about this, it seems like that kind of stuff is slowing down, which is certainly no surprise, because that's exactly what Jerome Powell said they are going to target, is the real estate industry, because they thought it was too hot, as they like to say it. So definitely 2023 real estate recession, absolutely. How long that's going to last, I don't know, because where's the pain point? How long is Jerome Powell going to keep rates at 4 to 5% while everybody's while everybody's going through a recession and things are hard for people? I mean, are you just going to keep rates up just to get that inflation down to that 2% target, or is he going to cave and reduce the rate to 3 or something like that, and then stimulate the economy? See, and like Joe said, it makes it when you start when central bankers and stuff like that start pulling levers, and we start giving stimulus payments. It makes it you can't. A lot of these things that we use to gauge the economy are almost irrelevant, because you can't tell. It's so complicated. The last 2 years have made it incredibly complicated to even tell where we're at. And as we kind of come off all the stimulus, it feel like it's like people coming back from showing up to work on Monday after a vacation. Is that you kind of start, you're rubbing the sleep out of your eyes and trying to get a kind of handle on what's going on, because the last 2 years has been like Alex said, they've given you or like Drew said, they've given you everything that you needed to grow your company, make things easy for you. And now it's it's like a Monday morning in March, and in reality is hitting you again. You got to start making decisions based on normal circumstances. And if they basically go back to where they lower the interest rates again and start handing out stimulus, it's only going to complicate and prolong the matter. So, if we're going to have a recession this year or next year, I don't know. I don't know that it really matters that much. The market I think is already starting to maybe look past it a little bit. So I think probably in the middle of this year, you're going to start seeing the articles that say, is the market disconnected from the economy? And the answer is going to be unequivocally yes, because it tends to look at least a year to 3 years ahead or something like that. So, but yeah, who knows? But like honestly, I don't think the timing I don't think really matters. It's just what they do about it is the big question. So, all right, so we'll move on to the lightning round. Sorry, what's that?
Oh, it's almost like when the teacher says, "Oh, you know what? Let's move the test until sometime next week." So you're like, "Great, I don't have to study." Right. On Friday night, and then you find out it's Wednesday, so you're gonna study Tuesday, and then they push the Friday, so you study Thursday. It's like just study for the test.
Yeah, it doesn't matter. All right, let's move on to the lightning round. So the New York Stock Exchange canceled a bunch of trades on Tuesday of this week. After a glitch that at the opening, so that there was a glitch at the opening bell for the New York Stock Exchange that caused a lot of stock prices to be either, the price was either really high compared to what it should be or really low compared to what it should be. And they don't know what caused the glitch, but ultimately they end up having to cancel a bunch of the trades that were placed that day. Additionally, a couple weeks ago, the FAA ended up having to ground a bunch of flights because there was a glitch with some sort of communication, some sort of system they used to communicate with pilots. And until that was fixed, apparently pilots could not, or they had to either keep their aircraft on the ground or land or cancel. But long story short, a bunch of flights got canceled. So we're starting to see a lot of these these computer glitches that are starting to have pretty big ramifications. Is this something that is this part of being in the 21st century where we have all these supercomputers? Are we just gonna have to live with this, or is this just is this stuff that we should expect to get too used to? I mean, what do you think? Are these problems gonna last for a while?
Well, I think as long as we're using computers to manage these kinds of systems, you will occasionally have a problem with a computer. And the more things you manage with a computer, the more industries or segments of the economy or society you will see computer glitches in. It's kind of like asking, 100 years ago, are we going to have to get used to this car crash thing? It's like, well, yeah, more people have cars, the more of them are going to crash, So there'll come a day when, the country's long-haul trucker fleet or taxi cab fleet will probably largely be automated and controlled by central computer systems, and they'll occasionally glitch. It's never great, but the more we proliferate computers to manage all these kinds of systems, I think we're going to see more of it. So I would say get used to it, but don't tolerate it.
It's here. As long as we have computers, unless they iron out all the issues that cause glitches, which might happen someday. I think it's just the cost of having that technology. Like Alex said, it's just you introduce something new. It's like before the internal combustion engine, we didn't have any spark plug issues, and now we do. We probably will forever. That's just the cost of it.
I don't think it's a computer issue. I think it's a cultural issue. I truly believe that we are experiencing a social dark age in the 21st century. And a lot of this has to do with the fact is that nobody is held culpable for any problems. Prior to all this government regulation, we could pretty much just point our fingers at corporations and say, hey, you are culpable for all of these problems. But today, the corporations say, well, wait a minute, you required me to have this particular system in place, and you required me to do this, and you required me to do this. So the finger pointing goes like this. And the reality is nobody is held responsible for the problems. When it comes to the SEC or the FAA having glitches, once again, back to my earlier comment, and until we start seeing some of these bureaucrats put out in stockades in the middle of the public square with a sign on their neck that said, I messed up the computers at the SEC, or I messed up the flights for the FAA. If nobody's held accountable, we're going to continue to have these problems. So I think we got to fix the culture instead of just point our fingers at the computers.
So I think the FAA, I don't think there was any culpability there, but the New York Stock Exchange did. You can submit a claim to the SEC if, for whatever reason, your trade getting canceled cost some monetary loss, and they will actually reimburse you for that. So, which I think is good of them, but it's going to be expensive, especially if Timmy the intern was on the desk that day and actually hit the wrong letter on the keyboard and caused an outage. That's a big loss for the SE or for the New York Stock Exchange, and Timmy probably lost his job. And it was the same thing with the FAA. It was a small issue. Like I think they downloaded like the wrong file date. It was like I think it was January 13th instead of January 14th, and the computer got confused by that. And while they worked out that confusion, they had to ground all these flights. I think they probably will get this. I think having this much reliant on computers is it's something you're gonna have to get to. But I think they will eventually get better with it as we kind of go along. Where if they do have the intern doing these simple things, but they find out that one simple thing can cause millions of dollars in losses and damages. They'll probably start making procedures for it, but as technology continues to increase and get better, you're probably going to see a lot of these kinds of issues, unfortunately. So, okay. So next one is that New York, the Wall Street Journal had an article that was basically stating that Jerome Powell and the stock market are frenemies. Essentially the article, but I mean, what do you think? I mean, do you think they're frenemies? Do you think it's just a cute title? What do you think they're trying to get at with that?
I think it's just a cute title. I don't think the markets hated him when interest rates were rock bottom, and I don't think he has a burning hatred for Wall Street. So I think they're just upset about interest rates. Nobody likes to actually have to spend money to borrow money, and I think they'll be perfectly happy with him when rates start coming back down again.
I think they're absolutely frenemies, but I also agree that it makes for an interesting, very clickable article title. Jerome Powell, or whoever the chair of the Fed is certainly going to get the credit for good markets and certainly going to take the flack for bad markets. So I could certainly see a frenemy relationship, whoever's sitting in the chair.
Nobody in Washington, D.C. asked my opinion on whether or not we should have a Federal Reserve anyway. So, but the reality is that when it comes to a long line of Federal Reserve chairmen, I think Jerome Powell has done a fairly good job of being balanced and just doing the mandate required of him, which is to keep inflation under control and to keep an eye on unemployment. And I think that he's kept that mandate in a nonpartisan way better than a lot of his predecessors.
I wonder which way you would lean if Washington did ask you if we should have a central banking system. Oh, I don't know.
Yeah.
I'm just
get rid of it. End the Fed.
I mean, Jerome, he's like a parent. He's like the parent that clearly Joe does not want. So he'd probably emancipate himself. But, it's like when you give your kids candy, they love you. When you say, hey, kids, you can't have candy, they don't like you. And that's essentially Jerome Powell's job. He's the candy man. Is that if things get too serious in the economy, he lowers the interest rates, gives them the candy, or the punch bowl, as they like to call it. And then when he thinks they've had enough, he takes the punch bowl away, and everybody's kind of mad at him. But you're right. I think Jerome Powell has done it. I mean, he's pretty much done exactly what he says he's doing. Is that we're going to raise rates, and everybody's like, oh, I think we've had enough. And Jerome's just like, no, we're going to keep doing it. And then it happened again, and he basically stuck to his guns and said he's done exactly what he said he was going to do. So I guess you can commend him for that. But yeah. All right.
I mean, the UK is better this year, certainly in that sense.
What's that?
Nothing. It's fine.
All right. So last question is that there's been. Have you seen the stuff with like Prince Harry and Meghan Markle on Netflix? It's been all the rage. I've seen it on the news constantly. Have you watched the Netflix documentary, and do you follow the stuff going on with Meghan and Harry and the royal family?
No, I haven't seen it. I generally don't actively follow the royal family drama. I mean, occasionally I just hear about something because it's in the news, but don't really care, so I doubt I will ever watch it.
I get a lot of my news from like the Wall Street Journal or the Investments and Wealth Institute. Very rarely are there royal family articles on it. In those publications, if there are, I'll read it. But I usually see like Prince Harry's face and Meghan Markle's face on like when I'm checking out in line at the grocery store on like People Magazine and US Weekly. So I kind of tune it out. No, I have no desire to watch that documentary.
I have about as much interest in watching a documentary on Meghan and Harry as I want to watch another Seth Rogen movie. So the answer is absolutely not.
Yeah, I mean, I would not watch The Bachelor, and this is basically like the real life version of The Bachelor. I can't stand it, frankly. I think it is a little bit funny, some of the stuff I've heard, but yeah, I do not follow this at all. But it's been like everywhere, like Netflix. They always do that thing where a movie pops up. When you open Netflix up, they always have like an advertisement one, and it just automatically plays. And so I had Prince Harry like talking at me, and you can't scroll so that it just shuts off. So I get, so I guess I saw the first like 15 seconds of it or whatever. But no, I do not watch this at all. So
I find it fascinating that there's so much interest in Harry and Meghan, who for the most part don't really have a major contribution to society. And yet there seems to be so little interest in Queen Elizabeth, who I thought was one of the classiest women of her generation. Is that if there should be 5 or 6 movies made, it should be made about Queen Elizabeth, not Harry and Meghan.
I'm actually interested now, because when I think documentary, I think like Ernest Shackleton, in The Endurance, or like the guys into Thin Air who like really accomplished something. I'm curious now, like why is this documentary worthy? Maybe I'll have to check it out.
It's a show about nothing.
Yeah, that's exactly what it is. Did they not make a show about Queen Elizabeth? Was there not a movie about that?
There was another Netflix show called The Crown.
Yeah.
That I think had Queen Elizabeth in it.
Okay.
I'm pretty sure it's her. It's about her. Well, about the royal family, but
yeah,
I think it's like it's like a historical drama kind of thing.
I thought it was fiction. If I could be corrected if it in fact is about the real life royal family. I just didn't think it was.
Yeah, I will say, like, if anything close to royal family, I did watch The Darkest Hour about Winston Churchill, and that was a well done movie, I thought.
It was.
Yeah.
If I was a little girl growing up in England, I would probably fantasize about being a member of parliament than being a princess. They seem to hold more power.
Yeah. Yeah. I mean, yeah, because I don't think they're just mostly just for show right now, aren't they? Is that the deal? I don't know. All right. Anyways. All right. So that's about it for 69 of Farm to Markets. All right. So we'll see you next week.